Welcome back to another deep dive. Today, we are methodically tearing down a really fascinating 2026 strategic report all about the Daddy Mines cloud ecosystem. If you follow digital infrastructure at all, you already know hosting is no longer just about buying some server space. It's really about finding a holistic digital partner. So, we're going to examine exactly how the Daddy Mines brand is positioning itself right now, and we'll dissect their super aggressive 2026 pricing model to see if their claims actually hold up against the big industry heavyweights. Let's get into it.
Okay, let's dive into this. We'll be looking at 5 key areas today: the brand and vision, infrastructure and security, pricing and TCO, their collaborative ecosystem, and finally, strategic growth. But hey, before we really get into the weeds here, I want you to ask yourself a question that's a core theme of this report. What is the true cost of a domain? Seriously, think about it. It's so easy to look at a checkout screen and see a 99-cent price tag and think you got a deal. But we have to consider the often hidden, long-term costs you might actually be paying down the line.
The source material draws a really stark contrast in the 2026 market. On one side, you have what the report flat-out calls promotional traps, the industry norm of dirt-cheap initial costs that inevitably lead to massive, unexpected renewal spikes. And then on the flip side, the report analyzes the Daddy Mines approach, which leans heavily into a transparent total cost of ownership. No surprises, just the real math.
Section 1. The brand and vision, more than a host. According to the analysis, Daddy Mines absolutely isn't your standard tech startup. It was actually founded back in 2018 by Rwandan social scientist Anathli Wales, coming out of a period of deep personal adversity. And since then, it's grown into this massive organization with 18 trademark departments. The report notes they actively fuse social science and psychology with cloud tech. Their stated mission isn't just to host a website, it's literally to empower living legends and help build lasting legacies. Kind of a completely different vibe, right?
Moving right along to Section 2, Infrastructure and Security, the tech stack.
Now, what's really interesting about this breakdown is the actual resource allocations. The baseline numbers are notably generous. The foundation of their hosting uses NVMe storage, which the report emphasizes is absolutely crucial in 2026 because, get this, it offers up to 10 times faster performance than your traditional SSDs. And unlike some major competitors that heavily restrict their entry-level plans to force upgrades, this analysis shows substantial disk space, massive bandwidth, and perpetual unlimited email support across their main tiers. On the security front, the report highlights 2 distinct, highly proactive defense layers. For shared hosting, they utilize CodeGuard. Think of it like a sort of time machine for your website, allowing for super easy, single-click restorations if something goes wrong. But for their heavy-duty VPS and dedicated servers, they deploy Acronis Cyber Protect. This provides full image-level server backups combined with AI-powered, military-grade ransomware protection. They're definitely not messing around here.
Okay, let's talk numbers in Section 3, pricing competitiveness and total cost of ownership.
And this brilliantly illustrates the actual mathematical formula the analysts use to determine the true 5-year cost of a domain. Because, as it turns out, the price you pay on day 1 is literally just a fraction of the story. Let's break down these specific variables a bit. You've got the introductory price, right? Plus the renewal price, multiplied over the remaining years, plus the annual cost of privacy protection. The report points out that competitors wildly inflate that final number with hidden, recurring fees, specifically charging you extra every single year just to keep your personal information private on the Whois registry, which honestly adds up fast.
When you actually run the numbers for 2026, the report highlights what it calls the GoDaddy problem. While legacy hosts hook users with those cheap initial offers, their renewal rates for a standard .com or .net jump significantly. We're talking usually around $22 to $25. The data shows Daddy Mines keeping their renewals much lower and more predictable, sitting comfortably around the $10 to $13 mark.
So the crucial point here is this. When you combine those lower, predictable renewal rates with the fact that they include Whois privacy and theft protection completely free, the report calculates a whopping 30 to 40% lower total cost of ownership over a standard 5-year plan. That is a massive difference for your bottom line.
Let's shift gears a bit. Section 4. The collaborative cloud ecosystem. So, Daddy Mines leans heavily into this 2026 paradigm shift known as collaborative intelligence. Basically, this is the idea that your basic cloud collaboration is totally outdated. Today, human creativity needs to be actively augmented by generative AI. To pull this off, Daddy Mines natively integrates with Google Workspace and Gemini AI, replacing all those fragmented, disconnected toolsets with one unified AI-driven environment.
But, the analysts also recognize that a full-blown Google Workspace setup might be total overkill for a solopreneur. So the report contrasts that enterprise ecosystem with Titan Business Email. Tailored specifically for independent professionals, it offers smart features like read receipts, scheduled sends, and even AI email drafting for just $1.48 a month. It's presented as a highly strategic, low-barrier entry point for smaller operations.
Let's move to and see how this all builds into Section 5, Strategic Growth Partnerships.
One of the most unique findings in the report is the DJVP, that's the Daddy Minds Joint Venture Partner Program. This actually allows small businesses, consultants, or coaches to operate effectively as affiliated subsidiaries. It's wild. Daddy Minds provides the brand legacy, the technical stack, the financial systems, and mentorship. This lets independent operators launch with massive institutional backing from literally day one.
The report also outlines a specialized track specifically for literary entrepreneurs through the Daddy Minds Publishing Group. Their Author Express service offers 4 distinct pathways to global distribution. Interestingly, the source document highlights a super aggressive promotional strategy happening right now, utilizing verified 26% seasonal discounts to attract new authors this weekend. It's clearly a very calculated push to pull users away from those legacy hosts.
Now, changing hosts is daunting, right? The report totally anticipates viewer hesitation by pulling directly from their customer Q&A section. And the biggest question they get, what if I'm not a tech expert?
Well, the report answers this objectively by pointing to the automated ease of use built right into the platform. The environment features one-click installations for over 400 applications. We're talking WordPress, Joomla, all the big ones. And it's backed by a 24/7 global support network that's basically designed to make onboarding as frictionless as humanly possible. Then there's the second major point of friction for consumers evaluating any new cloud host. It's a trust issue, understandably. Are there hidden fees?
The report's definitive answer is just no. As we saw with that total cost of ownership breakdown earlier, the core brand commitment is pricing transparency over promotional traps. All those essential add-ons that others charge for annually, they're already built into the baseline cost here.
Ultimately, the report presents a really compelling, data-driven argument for this ecosystem, leaving us with a provocative thought that really summarizes their whole core philosophy. Is your digital infrastructure actively helping you build a legacy, or is it just passively hosting your site while quietly inflating your bills? Definitely a question every digital entrepreneur should be asking themselves right now. Thanks so much for joining me on this explainer, and remember to keep questioning the standard.